Good morning, my dear students. Today we are going to discuss income from salary. Previous videos we have discussed income from salary section 15 in detail and some important concepts, definitions, etc. Now we move to section 16 and section 17, and also we will discuss how to compute taxable salary in this video. Let us start with section 17. We know income from salary deals with the three sections: section 15, section 16 and section 17. In our previous video we are discussed section 15, that is chargeability. Three things which are charged under the salary, that is salary due, salary allowed or paid, arrears of salary. These three components contribute the chargeability of salary, that is regarding section 15. Now we move to the next section, that is section 16. In our previous classes we are already discussed section 16 deals with some important deduction. We know that deduction is the permissible or allowable reduction in taxable salary or from gross salary while we are calculating taxable salary. So there are three deductions we have under the head income from salary. First one, that is standard deduction, and another one that is entertainment allowance received, and third one that is professional tax. Standard deduction is allowable for individual HUF or those people who have drawing salary. Any person drawing salary can claim standard deduction straight away without any restriction out of his total taxable salary, maximum up to 50,000. So a person can claim this deduction maximum up to 50,000. Suppose a person having a salary of rupees 50,000 per year, he can claim 50,000 as standard deduction. As a result, he is not liable to pay tax on his salary. A person having a salary of rupees 5 lakh, he can straightaway deduct or he can claim section 16 as standard deduction, maximum up to 50,000. So he is liable to pay tax on 4 lakh 50,000. Clear? And another important deduction, that is entertainment allowance. A little bit clarification is required while we are discussing entertainment allowance. Allowance means is an amount which is received for meeting the expense regarding his service. Suppose an employer gives an amount as entertainment allowance. There are two kinds of employees we have. First one, government employees, and another one other employees, that is non-government employees. There are different provisions or different rules applicable to these kind of or different types of employees. Suppose entertainment allowance received by government employees, the tax liability or the deduction allowable to the government employee is 1/5 of the salary or 20% of salary or maximum 5,000, whichever is less can be claimed as deduction. I already told you that some clarification is required. This entertainment allowance is an allowance given by an employer to his employee. It is first included in the total income under the head salary under section 15. We are already discussed chargeability. So as a part of this discussion, any amount received by an employee as entertainment allowance, first we have to include this amount under income from salary. Then we can claim a deduction under this banner only for government employees. Please listen. Only deduction can be claimed only for government employee up to this limit. Limit is 1/5 of salary or 5,000. We can't claim 1/5 of the salary straight away. Suppose a person receiving entertainment allowance rupees 5,000. His 20% of salary is 6,000. Only 5,000 can be claimed as deduction. Clear? Suppose a person receiving entertainment allowance, these people are coming under the category of non-government employees. No deduction can be claimed. The entire amount which is received as entertainment allowance is taxable. That's the meaning of this discussion. So entertainment allowance received is first included in the calculation of total salary. Then it can be claimed as a deduction only for government employees. There is no deduction or there is no relaxation on entertainment allowance for non-government employees. Clear? Then the last item, last deduction under section 16 is professional tax. Yesterday's videos we are already discussed the meaning of professional tax. Any amount which is paid by an employee to the local authority or municipality in which the organization is working or operating. So the actual amount paid by the employee to the authority can be claimed as deduction under this section. So we have 3 deduction under section 16, standard deduction, entertainment allowance and professional tax. But 2 deduction is allowable for all employees irrespective of the nature of employment, that is government or non-government, that is standard deduction and professional tax. Entertainment allowance is only applicable, the deduction is only applicable for government employees. Okay. Now we move to the section 17. We are already discussed. Section 17 deals with some definitions. First definition, that is salary. Yesterday we had discussed the inclusive definition of salary under section 17 subsection 1. Salary include 3 important components, that is first one mere salary, second one perquisites and third one profit in lieu of salary. Salary includes, by looking our slide again we have salary. This salary means components of salary. There are 8 or 9 components of salary. These components contribute the meaning of salary, and second one that is perquisites, and third one that is profit in lieu of salary. For getting a brief idea about this definition, let us briefly explain these 3 things. First one, salary. Salary includes, yesterday we had discussed an inclusive definition of salary. Salary includes wage, annuity, pension, gratuity, fees, commission, perquisites, advance salary, etc. etc. Then perquisites. Perquisites means any casual emoluments attached to an office or a position in addition to the salary. Over an employee may receive any amount over and above his salary. It is in terms of some facilities. Suppose college principal using college car for his personal and professional use. It's a perquisites. Availability of transport facility, not transportation allowance, it's a facility. Perquisites always is a facility. Suppose management is ready to provide a free quarters or residential accommodation to the principal. That is perquisites. This facility is over and above his salary. So this kind of facility, this facility is only for such people have some post or position. Suppose people like me is not able to get this kind of free transportation or free vehicle or free rent, free accommodation only because of I am not a principal in college. So perquisites means any casual emoluments or facility attached to office or position in addition to the salary. We will explain this term in detail while we are discussing the calculation of perquisites. Then the third one, that is profit in lieu of salary. That means profit in lieu of salary consists of any compensation or any payment as allowance or any payment received under keyman insurance or any amount due or received from any person before his joining any employment with the person or after the cessation of the employment with that person. So profit in lieu of salary consists of compensation. We know different kind of compensation. We have retrenchment compensation is there, service compensation is there, different n number of compensation. Then another important payment, that is allowances. Many allowances we have. We will discuss in detail allowances and different types of allowances. Entertainment allowance we are discussing. Then we have a foreign allowance, medical allowance, special allowance, dearness allowance, house rent allowance, city compensatory allowance, dog allowance, conveyance allowance, traveling allowance, transport allowance, and so on. N number of allowances. Same as any payment received under keyman insurance. All these constitute, all these contribute, all these consist of profit in lieu of salary. So in total, these salary perquisite and profit in lieu of salary consist of the definition defined under section 17 as salary. So from it is very clear the scope of the salary under section 17. As discussed in our previous slides, components of salary. We know there are different components. 9 or 8 components we have under salary. As we are discussed in our previous lessons, wages, pension, gratuity, fees, commission, perquisites, advance salary, or any amount contributed to the PF or annual accretion, etc. are considered as a component of salary. Then we have another important points regarding salary. There are different types of salary we have. First one, leave salary, death cum retirement gratuity, pension, transferred balance, compensation, received at the time of VRS voluntary retirement scheme, other receipts, fees, commission, bonus, annuity, etc. are the different types of or forms of salary. Let us see one by one in brief. First one, leave salary. It is also called the engagement of earned leave. If an employee does not avail his earned leave and receive payment in respect of any period of leave, it's called leave salary. Yesterday we have discussed this engagement of earned leave or leave salary. Any leave which is not availed by the employee may receive payment against this leave is called leave salary. Another important item or form of salary, that is death cum retirement gratuity. Gratuity is a service benefit that received by all categories of government employees or employees of local authority. But an important thing, that is the entire amount received as death cum retirement gratuity received by government employees is fully tax free. No need of pay a single rupee as tax on the amount received as death cum retirement gratuity. Whereas in the case of non-government employees, it is exempted up to the specific limit. We will discuss what are the exemption of exempted incomes. At that time, we will discuss in detail. The next one, that is pension. As we know, pension is received by an employee, whether it is a government employee or non-government employee, after retirement is chargeable under the head salary. As we know, pension, we know that is a benefit which is received after the retirement. Then another important, that is a transferred balance. Transferred balance means when we know what is meant by PF, Provident Fund account, that is called PF. When an unorganized provident fund is recognized for the first time, the balance standing to the credit of employee's PF account at the time of the recognition may be transferred to the recognized provident fund. That balance is called transferred balance. Once again, when an unorganized fund is recognized, we have two types of different types of provident fund. We have two types. First one, unrecognized provident fund and recognized provident fund. Some statutory provisions regarding this PF we will discuss. Types of PF. It is a probable question for a paragraph question. So at that time we will discuss in detail. There are two type of PF account. We have unrecognized PF and recognized PF. When an unrecognized provident fund is recognized for the first time, any balance standing to the credit of employee PF account at the time of recognition is called transferred balance. Is also coming under the category of salary. Then an important thing that we have to bear in mind, that is taxable portion of transferred balance, that is the employee will be aggregate annual accretion chargeable to tax for each year of the existence of unorganized provident fund, deeming his fund to be recognized from the very beginning. Okay. Then next one, that is compensation. Compensation, we have calculation on it, retrenchment compensation. Anyway, compensation is coming under the category of salary. Then another important thing, that is receipts of employee from public sector enterprises or companies or local authority at the time of voluntary retirement is also taxable to a certain limit, coming under the category of salary. And other receipts like fees and commission is coming under the category of salary. Then bonus we know that is a taxable item under the salary. Then annuity means any it's received from present employer, it's taxable as salary, but it is received from former employer, it is taxable as profit in lieu of salary. So important thing that's coming under the all these are coming under the category of salary. From our discussion up to this moment, I think all of you have enough idea or knowledge, background knowledge regarding the salary, computation of salary and basic terminology, etc. Now we are moving a serious business regarding the computation of salary. As we know, our business in this module is calculation of or computation of taxable salary. We know that for calculating or computing taxable salary, first of all we will consider salary. We are discussed components of salary. It may be basic salary or wage, fees, commission, pension, annuity, bonus, taxable annual accretion or transferred balance, or whatever may be taken into consideration first. Then add taxable portion of allowances, add taxable portion of perquisites, add profit in lieu of salary. We are already discussed compensation, any amount received under given insurance, etc. are coming under the category of profit in lieu of salary. All these four items, basic salary or wages or commission or bonus, etc. Then taxable portion of allowances, taxable portion of perquisites, profit in lieu of salary. These four items are added together. Then we will get gross salary. So automatically there is a question regarding how to calculate taxable portion of allowances, how to calculate taxable portion of perquisites. It's a major business we would like to practice in the coming videos. Don't worry. So it's a scheme of computation. First we will add these four items: salary, allowance, perquisites, profit in lieu of salary. Then we will get gross salary. As a result, we will exercise under section 16 deductions. As we have discussed, with three deductions we have: standard deduction, then entertainment allowance if the problem is related to the government employees, and professional tax. So always we have two deduction, standard deduction and professional tax. In certain situations, suppose problem is related to government employee, we have another deduction, that is entertainment allowance, maximum up to 5,000. So these three deduction can be claimed or can be deducted from gross salary. Then we will get net salary or taxable salary. Is the computation which can be exercised, or this is the method of doing problem in this module. It's a probable question for essay, 15 marks. So all of you please be serious on this scheme of computation. If you have any query, please ask me through WhatsApp or any other means. I am ready to give much clarification to clear all the doubts regarding the scheme of computation and the things which are discussed in our classes up to this moment. Thank you to all.